Well, howdy there, folks, and welcome into. I'm in a cave. I'm in a cave. It's a wine cave, okay, but I'm in a cave nonetheless. Oh man, it's been a minute. It's been a while since I recorded a video. It's been, you miss a week in the stock market. It feels like your whole life flashes before your eyes. I mean, it's incredible. So I thought I would record a video here. I am coming back, and I'm traveling back to the States tomorrow, and looking forward to getting back to content mode and putting out content for you guys. I've actually took a real vacation for the first time in a long time. And when I say real vacation, I mean like not working, right? and just really unplugging. And I just love to work, man. I just love to record YouTube videos, look into stocks, keep up with to date what's going on in the market and whatnot. I hate just not doing that, but it has been nice just to kind of get away for a few days and just completely unplug for everything. I think it can bring you some new fresh outlooks and those sorts of things. I've definitely got some of those. So I wanted to just kind of talk for a few moments about, there's been a lot that's obviously happening in the market, talk about some stocks, talk about kind of my feelings on the market going forward, and some of those sorts of things. And then I'll definitely get back to full regular scheduled content once I get back home, essentially. So but yeah, it's been nice to just kind of unplug, and it's been a long freaking time. I was trying to think of the last time I really had like an unplugged vacation, because sometimes I'll go places, but I just end up working. I end up, I'll be somewhere different than home, but I just end up still doing the same stuff, recording YouTube videos, looking into stocks, doing all the same stuff I always do. But this is the first time I've really had like an unplugged vacation since February of 2020, just before Rona broke out, essentially. So it's been interesting. So yeah, we'll just go down the whole lineup here and talk about a bunch of stocks. Oatly's been ridiculous. This is a stock that's climbed just in the past month like 70%, and they did have some big fundamental news that's come out recently. The stock was already running up before that, which makes me kind of wonder, did somebody know something before the news was announced, essentially? But they essentially had in my opinion, great decision. They made a great deal in which they're going to essentially use another company to manufacture their product, and they're going to be able to collect a ton of capital up front, which is, in my opinion, likely a smart idea by Oatly, given the cash flow problem for this company. If they were already making a ton of money, or this was a very different interest rate environment, I think vertical integration is the way to go, control everything, right? But that's not realistic right now. We know interest rates are extremely high. It's very hard to raise money, and we know Oatly has been, a big money losing company, right? And they definitely have a lot of things that are going to change for the positive, and their margins should definitely reflect that in 2023, and we should see huge margin improvements out of them. The price of oats has dropped off a cliff. I don't know if you guys have seen the price of oats that's dropped off a cliff. Obviously, cost of transportation in general has come down immensely, and a lot of the inflationary pressures that really absolutely destroyed that company in 2022, that sent it down to a $1 stock at the lows, right? A lot of that is going away in 2023, but essentially they're going to raise $70+ million of capital from this and actually make their business model into in my opinion, likely a better business model for the current environment that we're in and could be in for a bit of time here, essentially, right? And so, at the end of the day, I look at that deal, and it's the right deal to make, especially given the fact that they're a money loser. And you got to keep in mind, a lot of companies in the food and drink industry use co-packers, and folks that just focus on that. And then you, as a drink company or food company, you can then focus your attention dollars on getting more customers, on your marketing, on your more products, innovation. And a lot of times you can honestly move faster. You can move faster that way. It's not like that in every industry, but for the food and drink industry, it actually is. You can move faster that way. It's one of the few industries that's like that. Could Tesla do that? No. If Tesla had to do, Tesla would move slower if they didn't have full vertical integration. But at the end of the day, with a lot of these food and drink companies, they can move a little bit faster, and it's not so much of a cash flow concern like that. So anyways, the stock's obviously been going kind of beast mode. We'll see kind of where it shakes out. It's still a small cap stock relative, right? $1.5 billion market cap. So, those stocks can be up and down. Planet's come back recently. That one was on a massive kind of downdraft, and then I don't know what happened here. Maybe somebody made a video about it or something, and then the stock started shooting up. It was insane. Walgreens kind of doing his thing, Target's doing his thing, Foot Locker's doing his thing. Amazon has been just in a vicious downdraft. I understand it came back strong on Friday with a great day, but I mean, look at this stock. It was all the way down to $81 right there, right? I mean, this is a stock that's just been hammered time and time again. And it feels like Amazon's like looking for its next identity. And I've started buying some Amazon stock here recently, but it feels like a stock that is searching for like where's Amazon going over this next year? And a lot of people are very confused. They see the numbers that have come out of Amazon over the past year, not very exciting. E-commerce business, you look at those numbers, just Amazon Web Services hasn't shown nearly as much growth as it has previously, right? And so a lot of people are looking at this and they're trying to figure out where's Amazon's real growth rate. Is it 5%? Is it 10%? And I'm talking about really moving forward. And I think a lot of people are very confused by this, to be honest. And I think that's what a lot of investors are kind of waiting on with this one is like, what is the real growth rate? Because Amazon was always a business that you could be confident was going to grow 20% or more a year. But a lot of people, I think most people are looking at Amazon, they're like, this is no longer going to be a company that grows 20% plus a year. But they don't know, is this a 5% grower, a 10% grower, or 15% grower? And I think until Wall Street and investors get more clarity on that, Amazon's going to just kind of be in this rough spot of trying to find like where this stock price is going. And obviously it's been a vicious past year and a half for Amazon stock. I mean, this stock hasn't moved in years. I mean, literally you pull up a 5-year chart of this stock. And I mean, it's at prices it's lower today, even after that great day on Friday, than it was during March of 2020. That's crazy to think about, right? I mean, this stock was much higher than this back in 2018. Think about that. The stock price was 20% or so higher in 2018 than it is right now in 2023. This is Amazon we're talking about. Let that sink in for a minute. That's just insane, okay? Amazon's a great buy for long-term investors, obviously. Tapestry doing its thing. Skyworks Solutions is in a very tough position. Obviously, Apple's, it's no bueno, okay? I think iPhone sales are struggling, but Skyworks is a great company. Low PE, that's a great thing they have going for themselves. Vaughn, it is what it is. Corsair is interesting. Corsair's kind of had a tough month. Look at the 1 month on Corsair down 12%, and just in terms of the stock price, it just feels like one of those situations where it's like after the holidays, so people think electronic sales are going to die or something like that. I'm expecting Corsair to have improvements across the board in 2023 versus 2022. I'm talking revenues, I'm talking margin, I'm talking cash flow, I'm talking net income, everything. I'm expecting Corsair to get better. Pfizer's doing his thing. Shopify, kind of in a similar, it reminds me a lot of Amazon in terms of people are trying to figure out what's real in terms of real growth rate moving forward for Shopify. It showed this ridiculous growth, obviously, for many, many years, then had got supercharged by Rona, right? And now everybody's looking at Shopify and they're trying to figure out what is the real growth rate. Because until you can be confident that a company's going to grow at a certain growth rate, it gets hard to buy the stock. If people are confused whether Shopify is going to grow at 10% or 30%, a lot of investors are like, I can't buy this stock until I have more clarity and understanding. And I don't think a lot of people can give the answer to that around Shopify, right? In my opinion, it's a great company for the long term and for long-term investors. Just load up and throw in the filing cabinet. But at the end of the day, like, what is the real growth rate for that one, right? And it matters in a significant way. I mean, if you're talking about Shopify's not going to grow 5%, but let's just say 12% compounded annual growth rate versus a 26%. I mean, there's such a huge difference as you compound those numbers year over year, right? That it changes everything dramatically for a business model like that, including obviously net income, right? Which changes completely what you should be able to value that company at and what's fair and what's not fair, right? Tesla, continues to be in a tough spot. I understand it's come back a little bit, but that one, it's the same as that category Shopify and Amazon are in, Tesla's in right now. What's real? What's the growth rate moving forward? And a lot of people are very concerned about, is this a 20% grower now, a 30%, a 40%? Elon's talking about 50%, right? And it definitely smells of margin calls. It smells of a lot of just BS crap. as well. Just there's so many problems with Tesla's stock price right now that it's just all hitting the stock price, and that's why it's just in a crap area, and probably will continue to be for the next at least bit of time here. A lot of people are hopeful that the stock bounces back. If for my advice for longs in terms of mentality wise, don't hope for Tesla to come back over the next few months. I mean, if anything, you should be rooting for Tesla stock to go down more over the next few months. Like, if you're long and you have money to invest, right, and you're, fully believe this company's getting back to $1 trillion plus market cap over the coming years, and hopefully a lot bigger into multi-trillion dollar. Like, at the end of the day, like, you should be, if anything, rooting against the stock short term and rooting for it to go down over the next 6 to 12 months. That's just my opinion on the whole deal, right? Wynn Resorts has come back recently, up about 10% or so, in a bit of time. So that's interesting. Wynn's kind of come back. Macau, 1 minute there's excitement there, next minute China's closing it down again. I mean, it's a mess. As far as Meta goes, Meta's definitely found a bottom a few months ago and just continues to show strength. I'm seeing a lot of Wall Streeters start to jump on the Meta bandwagon, a lot of Wall Streeters. I haven't obviously watched CNBC much this week, but in previous weeks, oh my gosh, all of a sudden everybody's jumping on this Meta bandwagon, left and right. Everybody all of a sudden wants to be a Meta shareholder, talking about Meta, and this is the Wall Streeters I'm talking about, right, that go on CNBC and whatnot. All of a sudden Meta's become their favorite stock. And I'm just like, how did that happen? Like literally 2 or 3 months ago, no one wanted anything to do with Meta. And now all of a sudden, Tesla, Apple, all the other big techs are going down. Meanwhile, Meta's going up. And now all of a sudden, everybody was a fan of Meta. Now all of a sudden, everybody wants to be a Meta shareholder. And for us other Meta longs out there, we're looking at them like, what are you guys talking about here? But that's Wall Street for you. That's the stock market for you. It's just crazy, man. Crazy. Revolve continues to struggle in terms of stock price. Business is great. Business model's amazing. Management team's amazing at that company. But as far as the stock price goes, just in a very tough position. And with a lot of, obviously, fears about the economy and those sorts of things for 2023, it's going to cause more fears about Revolve and kind of their year they have overall, right? JP Morgan continues to do their thing. I mean, stock performs well, 4% up in a month. For a stock like JP Morgan, that's a boring, sleepy stock. That's very good. Google continues to downtrend. It's not bouncing. It's not bouncing like Meta. There's a clear divergence going on between Meta. In my opinion, what Wall Street's trying to force here, okay? And I talked about this in the past, in videos, but it's become clear as day now. What I was talking about a few months ago is now becoming so clear it's not even funny. Look at these two stock prices. And what I talked about is Wall Street wants to force Google to do a major layoff. And that's what I was talking about. And it's clear as day in the stock price performance of these two stocks that should usually trade together, because a lot of the business models are somewhat similar and whatnot, and people kind of group these two together. They should kind of usually trade together. Maybe one outperforms a little bit. There's massive divergence going on. 1 month, Meta's up 11%, 12%, and Google's down almost 10, 11%, right? What that tells me is Wall Street's trying to force Google into a major layoff. Meta's already did theirs. So Wall Street's happy with Meta now. They're getting put in the good boys camp. But Google's not there yet. And Wall Street will keep killing the stock until Google announces a major layoff. And the scary thing about that is the more and more companies that, essentially, I don't want to say pull the trick of, because it's not really a trick. It's just something that's necessary for a lot of these companies. But the more companies that do a layoff and then their stock prices go up, the more other executives have to consider, oh crap, man, our stock price is struggling. Maybe we need to do a layoff. At the end of the day, investors really run this game, and investors are really what control, obviously, board of directors. Investors are what control board of directors, what control CEOs. So all this stuff is influenced. And if Google stock continues to get massively outperformed by Meta, guess what Meta did that Google hasn't done? Massive layoff. Guess what Google's going to have to do if they want to see that stock price recover? Likely a massive layoff there, okay? As far as Adobe goes, not much going on with Adobe. It's kind of in no man's land right now. Palantir stock just continues to get hammered, man. It's one of those stocks that it's like, can it really go any lower? This stock reached recently. Fives for Palantir. It's not like this is a bad balance sheet company. It's a great balance sheet company, one of the best balance sheets you'll find of any company that's under a $15 billion market cap. In their business model, they have a commercial business. They obviously have the government business, super stable, big contracts, usually that are years in duration. And yet the stock price just continues to get absolutely hammered. The thing with Palantir is, we got to admit, it was definitely a retail stock. If you go back to these days, a lot of retail folks, a lot of stimulus money came into that stock, right? Stimulus. That whole crowd of a lot of people that were trying out the stock market, and let's spend our stimulus money on Palantir stock, essentially, right? I mean, obviously, those people aren't even in this for the long term. And so what those people did is they just cashed, and for a lot of those folks, let's say they put $5,000, right, that they had in Palantir here. If it's worth $500 now, or it's worth $1,000, they don't really care. If you're not really into the stock market, you're like, oh, damn, I lost a bunch of money. And you're just going to pull out your last $1,000 and you sell it whatever price, right? And maybe it was $10,000 and now it's only $2,000 or $3,000. People, they don't even care. They're like, I just want the money that was in my account. And so they sell. And even if, that's just the way it is. And this stock definitely got caught up into that. It was no GameStop. It was no AMC, something like that. But unfortunately, it got caught up into that whole hysteria during that time period. And $5-6. Can it go lower than $5? Everything's possible. Highly doubtful, in my opinion, as far as all that goes. Fubo could just continues to get hit. And Fubo, that one just stock price can't do anything right. They've attracted a ton more new customers than a lot of folks expected, but they can't do anything right now. Nordstrom's gotten hit hard. I guess, we call that the after holiday season sellout, because now people are like, there's nothing exciting going on there, right? As far as the chef goes, I think the one encouraging thing for the chef was kind of seeing that Oatly news, because there's a lot that the chef can do in terms of, trying to raise capital, in terms of finding ways to ease that business model and get themselves to a much better cash flow situation here. So, I think that's something that's positive, but at the end of the day, we haven't seen anything concrete really yet in a major way. Sam Galetti's been loaning the company money. That's definitely a worrisome sign. They're cutting it close, man. They're going to have to do something, make something happen here soon. Honest, up 5% in the past month or so. This is a company I think is really going to, a little up more than that, almost 7% in the past month. I think this company is really going to shine in 2023. Of the small cap companies, let's call it under the $1 billion crowd, that's the stock I'm the most confident in 2023 in terms of just showing very impressive numbers and getting a real shareholder base built in that stock. For the first time ever. It's never actually had a real shareholder base. It came public at the worst time, pretty much, after the hype cycle died down, and, Wall Street never really was able to get behind the stock the way they should have, likely. And I think this is just going to be a pretty good story in 2023, in my opinion. We'll see what obviously happens there. So, yeah, that kind of covers that. Other than that, the markets in general, in terms of kind of the NASDAQ and whatnot, still down over the past month. It has come back recently, but you pull up a 1 month, this baby is still down about 5%. And when it comes to markets in general, everybody's just trying to figure out where this baby's going. There's a lot of fear in the market. There's a lot that's priced in, but the big fear is, what happens if major earnings are hit in a significant way, right? And does that mean another 10% down for the market, or is that more like a 20% down for the market, right? And that's what everybody's trying to figure out right now. And there'll be more clarity we'll get in this earnings season and guidance these companies give, because usually this is when companies will give full year guidance. So basically, starting this upcoming week, we're going to start getting into earnings, and the big time period for earnings, if you're wondering, it's the end of January and into the beginning of February. Basically, the last 2 weeks of January and the first 2 weeks of February is an earnings onslaught, and just about everybody has reported numbers. So anyways, guys, appreciate you joining me in a wine cave that is. Thank you so much. Looking forward to getting back to videos as normal once I get back to town. But anyways, much love as always from Casa de la Playa in Mexico. Peace, eh?